talk about the auto industry. What's next in store for Bajaj Auto? What's the roadmap for growth? How are they tackling competition? Rakesh Sharma is the ED at Bajaj Auto now joining us. Thanks so much for taking time out. Now, given that there's so many factors to look forward to, there's new launches in EVs, Mr. Sharma, a recovery in exports, the growth in and the CNG motorcycle launch. Lots to chat about, but why don't we begin by the kind of recovery that we've seen in exports, a 10% year-on-year growth. Can you build on this number? And if so, which are the markets, according to you, that will really lead this growth?
Good morning. I must say that the exports recovery needs to be still watched for a couple of quarters. It is completely on the back of macroeconomic factors. Happily, in many countries, the informal exchange rate and the formal exchange rate are now finally converging, which allows the banking systems to support international trade, though of course it is a serious devaluation in many countries, which raises the ultimate purchase price, and that has to be digested. So yes, last 1 or 2 quarters are suggesting that we have bottomed out, and we've also sensed a slightly better flow of funds from overseas, but we will have to still watch a couple of quarters to see whether there is a substantive and sustainable recovery now well underway. Of course, the key contributor there is Africa, Nigeria, Kenya, etc. And in Asia, we had Bangladesh, which is a very big market for us, which was also hit. And all of them seem to recover. But like I said, let's watch for a couple of quarters more.
In the domestic markets, that's 125 plus cc, that particular segment, that's been doing very well for you. It's helping you grow your market share as well. Tell me, how is it that you plan to take it forward? What's the growth strategy? Any target market share that you may have in mind?
Well, happily, the top half of the industry has really outpaced the average, the bottom half of the motorcycle industry. And this has been a very important and strategic focus for us for quite some time now, which allows us to, which has sort of allowed us to introduce more and more new models, which really excites the customer in this segment. We have a powerful brand here, Pulsar, which is actually a 10,000, it's crossed 10,000 crores. So it'll be probably across the board one of the top brands in the country today. We have almost 20 models which serve different subsegments, right, starting right from the hesitant young biker to almost a professional biker interested in a very good biking experience. And these 20 models are going to be built upon. We've got a very, very full pipeline. So when you look at, the brand, the spectrum of the models, the pipeline, and the market tailwinds, we can be quite optimistic about our performance in the times to come. So in the top half of the industry, we are shooting for clear leadership over there.
All right. And with the upcoming Bajaj Pulsar 400 launch, what kind of pricing are you targeting? Do you have any range in mind? Because it is a pretty strong brand and it can help fuel the premium segment sales.
Well, yes, it is a much awaited introduction, the biggest Pulsar as yet. A lot of the Pulsar loyalists have been pressing us for it. It is still a few months away, and I think we will reveal the pricing perhaps on the day of the launch. So you'll have to wait a little bit for that.
Okay. Well, you've been also, winning the market share in Chetak, 14% in Q3, if I'm not mistaken. Any target that you've set yourself for over there? Any ramp up that you may have planned in sales that you could be working on?
Yeah, so in Chetak, our focus is, really in expanding the portfolio. You will see we have added and upgraded our current portfolio to our current portfolio. In the next couple of months, you will again see an addition, widening of the portfolio so that it covers more and more segment. We are pushing forward very hard on the expansion of the network. In another 3 months or so, we should be in, from the current 200 odd stores, we should be in 500 plus stores. And all that is definitely going to expand, have an impact on sales. So we want every month to be better than the previous one. And we want very, very clearly strong podium finish over there so that, as the sector develops, we can strive for leadership there too.
Okay. The FAME subsidy as well was slashed versus the industry expectation of an increase in the amount. I want to know what's your take on that. Do you think that that could perhaps dampen sentiment in the EV space?
Well, I'm not so sure whether anyone was expecting an increase in the subsidies, but I think it is what we have been saying is that more than the quantum of the subsidy, it is the certainty of the regulations and the subsidy regime which must be clarified, which very happily enough, at least we have a very clear view for the next 4 months or so. And then, of course, we will wait to see what happens to FAME. This is important for the larger ecosystem of vendors and dealers as well. Fundamentally, it is good that these subsidies are being gradually, they're being winded down because then the true cost benefit equation is out there for not just the manufacturers, but the customers too. And rational decisions can be made on pricing, on purchase, etc. And that's a very, very healthy thing. So this clarification and the movement towards reduction of subsidies in a stepped manner is quite welcome news. The impact, obviously, in the immediate term, there is always a shock. And we have seen after the subsidies were slashed last year, the penetration of electric two-wheelers as a percentage of the scooters population or two-wheeler population has stagnated. But bear in mind that the basic two-wheeler has also grown quite handsomely this year. So we are seeing a growth of about 25 to 30% range in the electric two-wheelers. That may get dampened a little bit, but having said that, it is very clear that the customer is quite switched on to the prospects of electric. And that's a very, very positive tailwind. The other thing is that, of course, the input costs are reducing, particularly the lithium-ion cells, which go into the batteries, which are very, very significant component of the cost. So I would say that it is still positive. It still makes great economic sense for the customer at today's prices to buy an electric. The growth rates may get dampened, but I think we will see serious customers and serious players emerge from the next 6 months, after the next 6 months.
Oh, yeah, absolutely. A lot of disruption lined up ahead, but I'm sure you will come out winners. Great to have you in the show, Rakesh. Thanks so much for taking the time out.
If you like this video, then like, share and subscribe to ET Now.